Thanks so much, Romaine. And joining us for Options Insight today is Scott Bauer, CEO of Prosper Trading Academy. Happy Monday to you, Scott. And another day, more gains for the major averages here in the U.S. In fact, the S&P 500 up a fifth day in a row, the longest winning streak of 2020. And yet you point out, very, very interesting, both the VIX, the fear index, and the VXN, or the VIX for the NASDAQ 100, they're both higher too. What gives?
What gives is there's not a lot of rhyme or reason, quite frankly, into looking at correlations in the marketplace these days. You can look at it equities versus commodities, or like what we're doing here with the VIX. So, you look at where VIX traded last week, Abigail, and it came down almost to the penny to its 200-day moving average. And when you look at that, the last few times it's done that, just like the SPX as well, they both bounced off of those levels. This move today in the market with the VIX being up, to me, is a little bit of a warning sign. It really is.
So it tells you that investors are perhaps not asleep at the wheel in terms of this, what seems to be a little bit of a melt up out of the last area of consolidation. In fact, if we go into the Bloomberg terminal, we can take a look at that VIX bouncing off its 200-day moving average. And you make a really interesting point here, because every now and then the VIX does what I would call a super spike. And if this 200-day moving average holds on a longer term basis, this chart suggests you could see a huge move higher in the VIX. What do you think about this? Do you think that 200-day moving average will in fact hold?
I do think it's going to hold, because I think there's just way too much out there, most of it in relation to COVID, but way too much out there that can go wrong, and so much that is already priced into the market about things going right. And I don't mean to sound pessimistic at all. I just mean to sound realistic at this point.
Mm-hmm. So do you think, or is there a way for you? Oh, please go ahead.
Oh, no, what I was going to say is I'm trading around that as well. And much to your point, I am looking for a VIX spike out in a few weeks. So what I'm doing is I am selling a VIX put spread that expires next Wednesday, the 15th. So I'm selling the 26-25 put spread. 26 is right where that 200-day moving average is.
Right.
And I'm using the proceeds from the sale of that put spread to buy a longer dated, the August 19th expiration, 30-35 call spread on the upside. So the combination there, I can do that for about 75 cents. And I'm looking for, at worst case, VIX is, to not drop from here. Mm-hmm. But I do think we're going to get a spike up in the next few weeks.
Okay, so you're putting your money where your mouth is. You think that the VIX may go as high as 35. In terms of those super spikes that have happened in the past, they tend to go to the last high or even higher. Who knows whether or not that happens? That would be a pretty bearish case scenario. But very quickly, Scott, is there a way for you to tell in terms of the VIX moving higher? Is it hedging against all these uncertainties, or there's some outright bears out there? And we have about 20 seconds or so.
It's definitely a combination, because what we started seeing last week was some massive amount of upside, way out of the money VIX call buying, like in the 60, 65 strikes. Mm-hmm. Those are definitely speculative moves out there.
Yeah, and that skew index, it's at levels seen back in December ahead of the crash, obviously, in February and March, and the same thing back in 2018. So you may have a point here. Maybe there's going to be some big volatility ahead for stocks. Scott Bauer, Prosper Trading Academy CEO, thanks so much for joining us for Options Insight. And from New York, this is Bloomberg.